Good afternoon, everyone, and thank you so much for joining us for our Improving Your Money Habits presentation with HUCU and HUCTW. Today's presentation is going to be mostly presented by myself, Migdalia Gomez, our Community Engagement Manager at the Harvard University Employees Credit Union, and Sarah Scruggs, who's our Community Engagement Specialist. Sarah and I will both be on the chat, and we'll also both present. So if you have any questions, you can message us directly. We have gone ahead and muted everyone just so it's a little bit easier. We know for some of you, it's school vacation week, so you may have little ones or a little bit older ones around making some background noise. So no worries, folks can eat, have crunchy chips. We will not hear that. But we do want you to interact with us. So we will have a lot of questions for you today, and we want to make sure that whatever questions you have, we're able to address them. So we are going to use the questions panel throughout today's presentation. It's either going to be on the top navigation or the right-hand side. Really will depend on what platform you logged in. Sometimes it's a little bit different on a tablet than a desktop or even mobile. Just to make sure that it's working, and also because we are curious, let us know where you're joining us from today. Or if you want to let us know something else, what do you plan on doing on this beautiful sunny day? And you can let us know either where you're joining us from or what plans you have for this beautiful sunny day using the questions panel, which again, top navigation or possibly right-hand side. Once we receive a couple of those, I'll know that you're able to hear us, and then we'll continue on with today's presentation. Okay, so thank you. I'm starting to see folks chatting in. So I see folks from Watertown, Boston. Ooh, cool. Someone's taking a walk with their dog later to enjoy this nice weather. Medford, Cambridge, East Cambridge. Wonderful. Thank you so much for letting us know. Just like you let us know where you're joining us from and what you're doing this afternoon. Somerville, Austin. Nice. Oh, someone has said, ooh, calling from their porch in Dorchester. I love that. And someone's saying that they're going for a walk later at the beach. Great. Thank you so much. Just like you use the questions panel for this question, anything that we could clarify later on today, please use the panel. We're here for you. We want to make sure that we're addressing any questions that you may have. We will email you, and we will also email you a couple of materials, including the recording for today's session. So feel free to not take as many notes if you don't want to, or if you have to step away and then come back, then feel free, knowing that it is going to be recorded, and we will send it to you. And we will also have a survey, which we will drop at the end, closer towards the end. Really important, if you wouldn't mind taking the moment to complete that survey. All of our presentations are really in partnership, and we sit down with HUCTW a couple of times a year actually, and review all of your survey. So please let us know when we do provide that. And I'm actually going to turn it over to Danielle now from HUCTW, who was going to talk a little bit more about our personal finance series.
Thanks, Migdalia. Hello and welcome to all our members. For anyone I don't know personally, I'm Danielle Boudreau. I'm an HUCTW organizer and recording secretary. We're really grateful that you're all here. We have more than 50 people logged in to participate, and that's an excellent turnout. Thanks for being here. I just want to also thank the credit union and also GreenPath for being part of today's webinar. This partnership we have with the credit union is a really excellent year-round series that we do. You can always find our other events at huecu.org/HUCTW, future events there, and we appreciate you all being here. And also just special thanks to Migdalia and to Sarah for presenting today and always to our group. Thanks so much.
Thank you, Danielle, and thank you again, everyone, for joining. Sarah will put in the chat the link where you can sign up for additional presentations or watch other recordings if you're interested. But I want to take a moment really quickly to just tell you a little bit about who we are at HUCU. Not everyone may be familiar with us. We are Harvard's not-for-profit financial institution, and really the biggest difference between us and a for-profit institution is that we are 100% focused on the financial well-being of our community, and we are specifically created and are Harvard employees serving the Harvard community. A couple of things that we usually get asked, well, what if I leave Harvard? What if I retire? What if I have a different job? Will I still be a member? Yes, you're a member for life, even after your employment relationship ends with Harvard. As for services and products, we offer the same as a bank. So credit cards, checking accounts, savings accounts. We also have mortgages. We also have IRAs. You can learn more about that on our website. That's all I will say about us at the credit union. But of course, if there's anything that we can clarify, feel free to let us know and we'll definitely address those. So what are we here to talk about today? Well, we're going to talk about improving your money habits, but we have this presentation in partnership with GreenPath Financial Wellness. GreenPath Financial Wellness are one of our partners that help us bring personal finance education to all in our community. And one of the reasons that we really enjoy partnering with them, as you'll see on the next slide, is that they're focused on behavioral economics. And that makes a huge difference for us. At the end of the day, most of us know sort of what we need to do when it comes to a good, healthy life. Like we know we should exercise, we should eat well, drink lots of water. We know for finances, yes, we need to save. We should try to pay off debt or minimize all debt that we have. We should plan ahead. Like we know what needs to happen. Same when it comes to academics. Like, yes, you should study, create outlines, and dedicate time to projects. Don't leave big projects for the last minute. But what gets in the way, really, it's our behavior. And there's so many different things that influence that. And what today's presentation is really going to get to is the science behind why do we do what we do. And to that point, it's important to know your money personality. And we'll drop it in the chat so that you have the link as to where you can take this quiz, or if you want to just Google it, NerdWallet money personality. But it's going to be really important as we're talking about improving your money habits, realizing that we're 100% going to be really focused on the science of why do we do what we do. And today's presentation, because it is in partnership with GreenPath, they have a behavioral economist on staff, and they essentially created the content that we're going to be going over today. And it is based off of understanding why do we have the behaviors that we have. And you'll see a little bit about the different types of money personalities. So there are 4 different money personalities, and there are many other different types. This is just one that we find at the credit union that really works well, that people can relate to. So we're going to talk about this one today, but know that there are many other ones out there. Just like most personalities in general, or personality quizzes in general, there's so many different ones out there. The important piece is getting to know a little bit better about ourselves, and then utilizing that to help us improve our day-to-day. So I don't want folks to take this and then see like, oh, I'm a money avoidance, I feel bad. No. We definitely don't want to feel bad about any of these. It's knowing that we are X, what do we have to do to get the best outcome when it comes to our finances? So there, specifically for the Klontz money personality, there are 4. You have money avoidance, which essentially means, I know how to deal with it, but I just don't want to do it. I like to think of our money avoidances as folks that, maybe you have a project around your house or maybe at work that it's like, yeah, it's been on that to-do list for a very long time. It's like, I know I have to do it, but there's no set deadline, or maybe the deadline, it's like you might miss it, might tend to procrastinate a little bit. That means you're on the money avoidance. So what are some things that we can do to improve that? Well, if I'm a money avoidant, then maybe some of the things I need to do is just like schedule a time, and maybe I reward myself. So maybe I say, okay, on Saturday at 2 p.m., I'm going to do X, Y, and Z. And then at 5 p.m., once I am done, I'm going to treat myself to my favorite ice cream, or whatever it might be. Just thinking of the nice weather and thought, going out for ice cream is always a fun treat. If you're a money worship, this tends to mean that you believe that money will solve problems, meaning that you may put a little bit more emphasis on it, similar to money status, where you may equate your self-worth to how much you have in a bank account. For money worship and money status, they do, just by the name of it, tend to have a little bit more of a negative connotation. Again, we're not here to say one is better. It's just, if I tend to be maybe a person of money status, then I may need to I may not save as much. So in that situation, I may decide, okay, I'm going to set up automatic savings so that I am not, maybe perhaps buying things that are out of my budget. Or for money worship, I may decide that I only want to have premium everything. I only want to have brand name everything. I want to have the top most expensive item. And in that situation, I maybe sometimes have more debt than I could afford to have at that moment. So as a money worshiper, maybe it means, okay, I do really care about the label. So maybe that means I'm going to set up a special savings account, and if I really want to buy X, I'm going to save for it and have a plan for it instead of putting it on my credit card or carrying a balance on that credit card. And then you have money vigilance, which may sound like oh yeah, I want to be the money vigilance. That's the one that sounds the best. Again, all of these have pros and cons. It's just like everything in life. We can all grow to improve. With money vigilance, you may be missing out on a lot of experiences because you may be so focused on that savings that you may forego experiences that really could help make your life better. For example, this could be people that have not taken a vacation in like 5 years, not because they can't afford it, but because they don't want to spend the money. And not taking a vacation for 5 years, that could have a major impact, even if it's a little getaway. Just the ability and the experiences that makes a difference in our overall well-being. So now that we have a little bit of understanding of our different money personalities, we know that that's one factor that is going to improve our money habit, that's going to impact our money habits. But there are other pieces that are also going to influence our money personality. I'm not going to get into all of these, but I wanted to address these because many times we tend to be hard on ourselves when it comes to money and spending. And it's like, oh, I know I should have saved more. Or, oh, why did I spend this? And we really want today's conversation to not be, we want to take the shame out of it. We want to take the guilt out of it because there's a lot going on. There's so many different influences. We're bombarded with advertising. You have friends and family members that you're looking at what they have financially. So there's so many different things that are influencing our money personalities that really what the rest of today's presentation is going to be is giving us the tools to help empower ourselves so that we're not in a situation that we're feeling overwhelmed. And really that's what you'll see on the next slide. We're here on how to maximize our money personality. So knowing all these different things, what can we do? The first one that I have, and I do ask if you have, a pen or paper next to you, let's start with the first one and let's define a financial goal. So for today's presentation, Sarah's going to take us through the second half shortly, but she's going to talk about, and I'll be dropping some things in the chat as well for some general tips. But they're not going to be that helpful if we don't have a goal to work towards. So we're going to make this an active presentation. So we're going to ask you, take a moment right now, grab a piece of paper and pen. If you are on a computer, you can definitely do that as well, but I do recommend writing it down. There's a couple of research that has been done, and just the act of writing financial goals. And obviously you can then obviously transfer it over to an electronic format, but there's something to be said with writing down a financial goal, and especially as we go through today's session. So let's take a moment and write down what is one financial goal that you have for this 2021 year. So what is something that you want to accomplish financially by December 31st of this year? I am going to allow us a moment of silence. So I ask you to bear with me, but I'm going to mute myself and give us 30 seconds to write what is a financial goal that you have that you want to accomplish by the end of 2021, that being December 31st, 2021. And I'll give us a couple of seconds to write that down. Okay, I hope folks took a time and actually wrote down that financial goal. And I hope you have space on that piece of paper, because What we're going to talk about now, we're going to talk about actually improving your financial behavior. So now that we understand what leads us to have our financial behaviors, and we understand we're not here to feel guilty, like, I really shouldn't be a money worshiper, or I shouldn't do this, I shouldn't do that. No, no, no. We are who we are, and we should all love ourselves for who we are. We're just going to, elevate ourselves. We're going to improve ourselves, elevate our financial goals. So what are some ways that you can do this? What are some things you can do to improve your financial behaviors? Sarah's going to walk us through a couple of different examples. As Sarah is walking us through the different examples, take that financial goal, so sort of what I'm envisioning. You have the financial goal on the top of your page, and then as Sarah talks about some of these different ones, what are some things you can do to reach those financial goals utilizing some of the strategies? So for example, I see thank you, some folks shared some of their financial goals. So some people said that they're looking to buy a home. So if you're looking to buy a home by the end of the year, Sarah's going to give us some tips and write down, using X, Y, and C theory, I'm going to do A, B, and C. And I'll turn it over to you, Sarah, so that you can help people now activate and reach those financial goals with these financial behavioral tips.
Thank you, Migdalia. Good afternoon, everyone. Good to see you all here and to have you here for this presentation. Like Migdalia said, I'm going to be taking us through some different theories that are all backed by behavioral scientists. And what I really like about a lot of these is that they're not just for our financial behaviors, but they're for a lot of behaviors. So you'll see probably a common thread among a lot of things, although money is it's very different for all of us. So I would bet that each of these you could think back at least to one thing in your life that may be impacted by some of these theories. The first one we're going to speak about is pre-commitment. When we talk about the theory of pre-commitment, this is when we promise to ourselves that we are going to do something. So we commit in advance to a particular course of action. This happens in our life pretty often. If you maybe, let's say that you want to work out every morning before you start, open up your laptop and start work. And so you lay out your workout clothes every evening so that in the morning they'll be ready for you. This is making that pre-commitment to yourself by saying, okay, I'm going to do this. Now I'm going to set myself up for success so that I can take that particular course of action. So how would this work for our money? Scheduling a time to work on your finances. Let's say that maybe one of your goals is creating and sticking to a budget for the year of 2021. Maybe you've never created a budget that's worked for you and your family before. That could be a really great goal for 2021. But one way to help implement it is by pre-committing to scheduling a time to go back and work on your budget, or scheduling a time to look at your expenses. By pre-committing and saying, okay, this is what I'm going to do, we hold ourselves to that a little bit more. Having it on my calendar is pretty much at this point holds everything together in my life. So if I schedule something on my calendar, that will help me carve out time for it. That will make sure that I'm able to make the time for it and stick to it. Another method that sometimes people use to implement this, let's say that you really want to get rid of a lot of impulse spending. So you switch over to using cash more often, because cash can help us pre-commit. Because if we say when we go to the grocery store, we only want to spend, $50 for today. So we go in, we only have $50 in our pocket. We don't have our credit card with us. And so we physically can't go over $50. By doing this, you're really setting up what we call like friction. So you're not saying like, oh, you just can't do this because you shouldn't, but you're actually setting roadblocks for yourself to be able to save that money, or doing the behavior you actually want to do, which is spending less or possibly spending a particular amount on something. So when you pre-commit to something, you're saying, this is what I'm going to do in the future. Are there any times that you've used pre-commitment for your finances? If so, if you want to share those in the chat, I would love to read about them. Great, someone already submitted something. My partner and I have monthly dates where we review each other's budgets. That's fun. And discuss our progress on our individual financial goals. That's awesome. So they've set up this time where they do it every single month together. I love that example because sometimes if we can't hold ourselves accountable, it's nice to have an accountability buddy to do that with. So I love that. Thank you. Somebody uses a particular app called YNAB, or You Need a Budget, and this definitely helps you to pre-commit to something. They help you to constantly check it and check in on it. They have some really great articles about budgeting, so thank you for that example. Planning how my paychecks get distributed ahead of time to know what wiggle room I have for spending. Awesome. This is definitely really important. When we're thinking about our budget or spending plan, as a lot of people like to call it these days, some of that is pre-commitment, saying, you know what, this is going to go to this, and that's what I want it to go towards. So I love this. Thank you so much for sharing. In a separate calendar, I put what I bought and how much it costs me. Yes. Yep. Wow. Love all of these. These are great. Thank you for sharing so much. I love these. So next one that we're going to talk more about is goal gradient theory. Goal gradient theory is used quite a bit throughout my life. I know for myself and my own personality, it is really important that I use goal gradient theory across the board, pretty much in everything that I do. This is where we take a really large goal. So let's say our goal is, somebody gave us an example of buying a home. That's a pretty big goal, right? That's a lot of money. That is probably the largest investment we'll make for ourselves, and a big chunk of our life is making sure we're investing in a home that can keep us safe and warm. And so that's a large goal to just start off with, to say, you know, I want to buy a house. But if we can break down that goal into smaller goals, we may start to see ourselves be motivated to save even more. I know in kind of outside of financial terms, I use this in my day-to-day work. I'm definitely a to-do list kind of gal. I have a to-do list that keeps up with everything I need to get done. And I have large projects that we work on. Like, we are working on a project for June. Right now, we started back in January. And if I just had that overall goal, like, okay, I want that to be a successful event, that's a great goal, and I really hope I reach that. But I have to have smaller goals to be able to get me to that. So I need to have goals like making sure we hit our weekly marks for the event, making sure that I'm checking in with our presenters and letting them know about things. So having those smaller goals leads to me being successful in the larger goal. What are some ways that we can see this in financial terms? I saw that somebody said they wanted to start building up their emergency fund. Wonderful. That is super important, and we highly recommend that. But if we say, you know, I need to save up, if we calculate our 3 to 6 months of expenses that are what experts recommend for our emergency funds, here in Boston, in the greater Boston area, that's a lot of money that you're going to be saving up, because our rent costs a lot, our groceries cost a lot, even just transporting ourselves from one place to another can cost a lot of money. So building that emergency fund gradually, not saying, you know what, I want to build my entire emergency fund in this year. That may be a really great goal that you could hit, but if you're not able to hit that goal, breaking it down into annual as well as a monthly goal can help you to see that you are getting there. And every time you see, like at the end of the month, okay, I've saved my monthly goal, that helps to motivate you a little bit more to continue on in saving towards this goal. I know for myself, I use a budgeting app called Mint on my phone. And on there, you can set savings goals, and they'll break it down for you by month of how much you need to save. And every month, if you save that much money, they do this little celebration confetti pop on your phone. And I love it. That's just enough motivation for me to continue saving. And I'm seeing, okay, Now I only have this many more months of how much I need to save to reach my goal. That's extremely motivating to see I'm doing this, I'm making it happen little by little, because a little bit does go a long way. So like someone mentioned, they're saving to buy a house. If we say, okay, I need to save for my down payment, that could be really daunting and overwhelming, and sometimes can be off-putting. We could say, you know what, I'm never going to save that much, so why even start? But if we start out with those smaller goals, we could get closer and closer to being able to reach that goal. And somebody asked what was the name of the app. It's Mint, like M-I-N-T, like a peppermint, and it's through Intuit. And you can find the app in the Apple App Store or on the Google Play, I believe. So you can connect it to all of your bank accounts. It can be a little overwhelming at first, so I highly recommend taking it slow on the app. But I highly enjoy using that as a little bit of motivation for myself. Planning fallacy. Now, there are a ton of examples that I could use for my own personal life outside of finances about planning fallacies for everyone, but this is underestimating how long it will take you to complete a task. So this theory is that a lot of times we say, you know what, I can definitely make that happen. I don't know if this ever happens to you, but you're getting ready to finish up the day at work and you see, you know what, I have one task. I definitely can finish that up by the end of the day. And then you absolutely cannot finish it up by the end of the day. And it's because it just takes a lot more work than that. And sometimes we think, you know, oh, actually, I won't be distracted by the 10 other things happening on my computer, or maybe I won't have interruptions from my children at their school computers. So I highly recommend thinking through what are some ways that we've experienced planning fallacy in our life. But how have we experienced planning fallacy, and how does this relate to finances? A really large, common, I would say, part of planning fallacy in finances is credit card balance transfers. A credit card balance transfer is when you have one credit card with company A and you see that this other company has a lower interest rate on their credit cards and they have a balance transfer rate at 0% interest for 12 months. And so you take your balance from credit card A and move it over to credit card B. Now you don't have interest on any of your balance for 12 months. And you think to yourself, I can absolutely pay off this credit card in 12 months. That can definitely happen. You can reach that goal. I highly encourage you to reach that goal. You can use goal gradient to reach that goal even. But with planning fallacies, sometimes we say, you know what, I can totally do that. But then our plans just don't make it work. We don't get to where we want to be. And so what we need to do to stay on that goal, some tips for credit card balance transfers. If you do decide, I want to go with the 0% interest on a new card. First, you need to calculate your monthly payoff payments. How much will it cost you monthly to pay off your credit card balance in 12 months? Whatever that special rate 0% may be, how long will it take you to pay off the balance so that you pay no interest, so that you take full advantage of the interest rate that you got? And then setting up automatic monthly payments. Like someone said here, they calculated out what they wanted taken out of their paycheck. And that is so important that you're calculating this out and then setting it up automatically. If you set it up automatically, you can't miss it. You can't miss the date because it'll automatically happen for you. And this is a way to really get around kind of the planning fallacy of, oh, I'll set that up at the end of the week. Go ahead and set up those monthly automatic payments so you know exactly what date it's all arriving on time and ready to be paid off. And this is probably the biggest tip of all. If you do decide to get a credit card balance transfer, we highly encourage to not add additional debt, Because what could happen if you get that credit card balance transfer, you get the credit card, then you start using it, your balance goes up, and those monthly payments that you calculated and that you set up automatic payments for will not cover the entire balance on your card. So I highly recommend not putting additional debt on that credit card. Get a debit card from your bank, or possibly using the cash method, so that this way you're able to make those monthly payments and pay off that debt by the time that special interest rate is over. In the chat, if there are any examples of a planning fallacy that has happened to you when dealing with finances, if you could put that in the chat, I'd love to share some other things. Credit card balance transfers are pretty common, but there may be some other ones that we'd like to share as a group here today. I'd love to hear any of those examples that you may have. You're underestimating how long it will take you to complete a task. I know for myself, this has definitely happened in wanting to be able to save up for a specific portion of my retirement, wanting to get up to, a certain percentage. And I'm like, yeah, I can definitely get up to that percentage within 6 months of starting work. And that just absolutely did not happen. My expenses were much higher than I thought they would be, and my planning just kind of went out the window. Somebody said financing large expenses. Absolutely true.
Yeah, we also had a couple others too, Sarah, that came in. One that came in was on planning for car expenses. And I think this is one that definitely comes up. And if not with cars, even with homes, with so many different things, not knowing what those expenses are going to be and therefore not being able to truly plan for them. One tip that I would recommend is either having a separate account, or as part of your regular savings account, having some money that you put aside every month. That way, when something does happen, you have some funds to dip into. And depending on what those are, maybe you take the last expense that you had and divide that and try to plan to have that amount to start off with. But that's another one that could be moving costs. Yes, that's a really good one. Underestimating moving costs. Oh, a lot of good ones. Planning for birthdays, vacations, holidays. Yes, that's a really good one. I would say that's similar to the other one that I just mentioned with car expenses, is just adding those to the budget and putting some money aside for it on a weekly or monthly basis, because these things will happen. And I'll turn it back to you, Sarah. I'm not sure if there are any others that you see or want to address.
Yeah, thank you, Migdalia. It looks like someone said trying to build up savings. I wasn't budgeting or tracking spending, and they just kept withdrawing from savings. And we actually have, I think, another tip down the way that I think may help with keeping yourself from withdrawing from savings as much. And something that I will mention, HUCTW does have a loan for moving costs. And I don't know if Danielle or Laura want to speak about it, but I know that that is something that's available to us union members.
We do. Through our partnership with the credit union, we have 3 types of loans to deal with home expenses. The most commonly used is the rental transition loan. So when you're moving into a new rental and you need first, last, security, moving expenses, all of that, you can apply for this loan. And if you're a member and you're a credit union member in good standing, you'll be approved, and it's 0 interest. So it can help you spread that cost without incurring a lot of extra financing costs. And then for homeowners moving, we also have another loan just for moving expenses. And then for homeowners and renters, if you experience some kind of like sudden catastrophic home issue, like a tree falls on your house or your water boiler fails, we have what's called a home emergency hardship loan, also 0 interest, up to $3,000, which can really help with these sudden things that no one can predict.
Thank you, Danielle. I saw that and knew I wanted to get you on the call, so I'm glad that you were there to talk about it. And that is through the credit union. So moving costs can be huge here in Boston, especially in the greater Boston area. That is definitely important to think about. So the next one we're going to talk about is decision paralysis. This is one that probably all of us have had at some point in our lives, which is not making a decision or making the easiest decision when you're confronted with too many options. In the finance world, we are constantly bombarded with different offers, different ads telling us what the best credit card is, letting us know this is an even better savings rate, or you'll definitely want to go with this stock or whatever because it's the best one. And so sometimes when we have so many things thrown at us, it's easiest just to not make a decision at all, which in turn is making a decision for us. It's telling us that we're not possibly going to get the best out of that opportunity. So I highly recommend that if you feel like you're in a place where you've had trouble with decision paralysis, you look at all your options and you say, you know what, I just have no clue. I've said that more than enough times in my life. It's just not even worth it. I don't even want to think about it. One where this comes up quite a bit is, a really clear example is in the past about a year now, with refinancing your mortgages. So if you have a mortgage, it's been a wonderful idea to refinance, but it takes a lot of work to do that. And there's a lot of different financiers out there to help you. I know with my mom, this was a really big deal. She struggled with trying to figure out, okay, so what paperwork do I need? Who do I need to talk to? What lender would be best for me? And so ended up waiting to really figure out all of her options. And then the rates went up by a little bit, not too much, but these things can really have an impact on our finances. So what are some ways that we can get better at this? Avoiding paralysis using this chart of the 4 financial well-being elements. So let's say that we feel like we have pretty good control over our budgets, but we're feeling just so overwhelmed with not having an emergency fund, or not really feeling like we're secure in our future, really nervous about possibly like retirement or something of that. So we see the future security. We take the line that's on security and the row that's on future, and we see the capacity to absorb a financial shock. So one thing that we can do to help our paralysis is say, you know what, I don't feel as comfortable in my future security. So what can I do? I can start building an emergency fund in a savings account today, because that will give me the capacity to absorb a financial shock in the future. And if I check that off my list, I will be secure in the present and in the future because I already have my budget and I have control over those day-to-day finances. There's another one here that a lot of us, I know I'm constantly nervous about, am I on track to meet the financial goals that I have, not right now, but way down the road? Will I be able to set goals for my future when, I have grown children that I want to send to college? Those are things that I think about now. And so what can I do to help myself choose to set myself up for success for that future freedom of choice? I can possibly meet with somebody. I can meet with the certified financial advisor to talk a little bit more about my goals and what I want to happen and how they can help me get there. Maybe something I can do is meet with one of our retirement representatives at TIAA that we have, where we can have one-on-one meetings with them for free. So really being able to say, this is one thing that I can do to better myself. I highly recommend, if you have the opportunity, to really sit down and just think, what is one way that I can take control over this particular goal, this particular need in my life, and make it happen for myself? And a great way to help with this too is talking with a trusted person in your life, and helping lay out the situation together. Tunneling. This is one that has definitely probably affected a lot of us. When there's an emergency or something comes up, like Danielle was saying, those unforeseen emergencies A lot of times we just immediately are like, we need to get this fixed. We don't think through something. We don't, think to call HUCTW and talk about that loan, or we don't think through all of our options. We just immediately make a decision. It's kind of the opposite of decision paralysis, that we just make a decision based on whatever information we have in the very moment. How can we help this? We can know our timeline. Let's say that there's something that's gone wrong with our car. I know this has happened to me before. You go to the one car shop, and they tell you you're going to need this, this, and this done, but you can still drive the car right now. Okay, so I know my timeline. Maybe asking them, how long do you think I have left before it'll be an emergency? Or what is the timeline for getting this fixed? And then you need to compare at least two options. Even in an emergency or a need at hand, there is probably still time to get at least two options. This just gives you a good understanding of what is the market for this. Maybe you need to get your roof fixed or something of that nature. Having two people come out and really give you their estimates of it will help you to see, okay, I have at least two options that I can go with. This really helps you to see, okay, it's more than just the emergency at hand. This is important for my overall financial goals. And then talking to someone. Like I said, using a trusted source, maybe your partner or possibly a coworker that you know has recently gotten their car worked on or their roof worked on. And I definitely recommend talking with somebody so that they can help you lay out your cases and say which one may be best for you at the moment. And it really helps you to see perspective because yes, it may be an emergency at this point, but they may be able to tell you in the long run, this option or choice might be best. And it looks like someone said they recommend at least 3 options when dealing with auto shops. It definitely, it definitely can give you a lot more options there, but we want to make sure that you're getting the best price for what you can, but also making sure you're getting your issues taken care of. Thank you for that suggestion. Mental accounting is one of the last ones we're going to speak about. And this one is interesting to me because I definitely do it all the time. Treating money differently depending on the source and the destination. So this one we see constantly with tax refunds. Tax refunds, we get checks in. I know I get mine direct deposited into my account and I'm like, ooh, free money. When in reality, if I had gotten that money on my paychecks, I would have a savings plan saved up for it. I would have my retirement taken out of it. I would have done all of those things in advance. And now in my mind, I'm like, oh, I can use this for all the fun stuff. And yes, I'm probably still going to give myself a little bit of money to have some of the fun stuff with. But I also need to think through, what are my goals? What are my overall financial goals? And how can this money that maybe you've gotten as a surprise or I didn't know I was getting this large of a refund, how can it help me reach those goals? So use a mental accounting for your benefit. It doesn't have to just be bad mental accounting. You can't just say, ooh, free money like I do. You could say, oh, when I name my savings account, that helps me to know. Like somebody said that they take money out of their savings to spend on things that maybe they think about later and say, that wasn't really what I wanted. But if you name a savings account, there's research that shows when you do have to transfer money out of that savings account, you think a little bit more about it because you say, if you've named it, like let's say you've named it down payment for your home or down payment for building materials. The next time that you think about, oh, well, I actually need $40 more to spend on takeout for the week. And then you think to yourself and you're like, well, actually, I want to keep that in my down payment or my building materials account. And somebody asked, do you recommend having multiple savings accounts with different names? This is something that I know on my financial institution, I can do that and still get the interest over all of my savings accounts. But a good thing to do as well is to keep it in like an Excel spreadsheet or like an app in Mint. I know when I set up my little savings accounts, it does it on Mint, but not through my financial institution. So I'm still getting that good interest rate that I want. But having those different savings accounts will help you to take just another look and say, actually, I don't want to spend the money I was saving up for that on something like takeout this week. And then
Sarah,
oh, sorry, go ahead.
just like to add to that, for us at the credit union, if you log on to our desktop online banking, that we do have a savings widget that can give you the opportunity to rename. Well, you can rename your accounts on the when you're on your home page, but you also can create savings accounts and savings goals with the savings widget, which can allow you to have the money in different accounts and have it tied to different goals, and it'll track that for you. So that is something that's available for any of you that have an account with us at HUCU, and that's automatically on the dashboard. If you don't see it, just add the widget, which would be on the top navigation, top gear icon. Thanks, Sarah.
Thank you, Migdalia. I think that's really helpful. And then creating mental shortcuts for unexpected money. Say it's around tax time. Go ahead and make a plan for what you're going to do with your refund if you know you'll be getting a refund. Don't just leave it up to chance that you'll figure out what to do with the money when it comes, but say, I know exactly what I want to do with this money when I get it in my hands. So use that mental accounting to your advantage. Scarcity. A lot of us have seen this happening in the past year. A lot of people are motivated to buy when there's a shortage of product or something that we want. Something that comes to mind really easily is last year when there was the toilet paper shortage. We all went out there to get toilet paper because you're like, well, what if it goes away? And it is definitely important that we take a step back and really understand it. So how do we make scarcity, the theory of scarcity, work for ourselves? We have to make sure that we sit and wait. Let's say that we get an email. I know I got an email this morning from Old Navy. I don't know if any of you are signed up for their emails. They email me probably every day with some new discount or sale or clearance that's going on. And this happens every day. That's not an over-exaggeration. That is reality. So I can just wait. If I really wanted something from Old Navy and it wasn't on sale yet, I know in my brain it's probably still going to be on sale and still going to be in stock when I want it. And outsmart the marketing tactics. I know that I think back when I was maybe a teenager, I signed up for Bed Bath & Beyond coupons. They send them to my phone every week, and every week they send me another little text that says, your coupon's running out. And I know, because I'm extremely intelligent, that they're just going to send me another coupon next week. And that is okay. So if you really want something and you feel like maybe it's going to run out, or maybe something's going to happen where I really will want it, just make sure that you wait. Take a second, step back from it, and think to yourself, do I really need this product or want this product? Hyperbolic discounting. Hyperbolic discounting is where you put a lot of value in the present. So you're saying present me really wants this more than future me will need it. And I think something that's interesting is we do this quite easily with retirement. I know when I started my first job at 22, I thought to myself, at what point in my life will I need to start saving for retirement? Because it cannot be now. I was 22 years old. I wanted to use that money to have a lot of fun and be able to go out with my friends and go out to eat. And so there was no need to start saving for retirement then. Looking back, I would have really have loved to have started saving for retirement then with the extra money that I had in my paycheck. So you can see in this chart here that the interest, the compounding interest really does have an impact on the future value. So Iris in this case started investing when she was 25, but only invested until she was 35. And she only spent 10 years investing and only $12,000 invested, but ended up with more money than Lucas did because he started saving, investing later in life. And so we highly recommend starting early. Maybe you've already passed a couple of these ages on this PowerPoint. That's okay. Starting now can help future you. So don't put too much pressure on yourself to spend all your money now because you're never going to retire. I think I thought about that. But start thinking about, I don't want to deprive myself in the future. I want to set myself up for success. I'm not depriving myself now, but what I'm doing is I'm setting myself up for success in the future. And then the last one we'll speak about is the what the heck effect. This happens to me quite often in everyday life, specifically about like eating healthy. So let's say that in the morning, I decide, you know what, I am just going to have that breakfast pastry that I've been wanting to have and possibly have more than just one breakfast pastry. And then I think to myself for the rest of the day, you know what, I've already eaten the things that I didn't want to this morning, so I'm not even going to try to eat healthy the rest of the day or make better choices for myself that I wanted to make in the first place because I've already messed it up. And maybe this is the case for you in a lot of things in your life. Maybe you look at it and you say, you know what, I failed. I don't want to even try again. I failed. I don't want to try again. But we have to really change our mindset and say, the failure that I have is part of my success. There's no way that I can just be perfect all of the time. And if I'm not perfect all the time, then that's okay. I can start whenever I need to. So gain back that motivation even after something may happen that would cause you to lose that motivation. Say to yourself, that's okay, it happens, and move on with how you want to be, because that is really key to your success with finances. We're not going to be perfect with our finances. Myself and Migdalia aren't perfect with our finances in any sense of the word. Speaking for myself, I guess I won't speak for Migdalia, but for myself, my finances are not perfect. They're
I agree
definitely.
with you, Sarah.
Oh, thank you, Migdalia.
We all make mistakes.
But I definitely have seen myself be able to be a little more resilient and say, you know what, that wasn't how I wanted to spend my money last month, but I can turn it around this month. I think I can make it happen. And that's the best attitude to have towards your finances for sure. So what are some next steps? Know your money personality. Know how you can maximize that money personality. And identify examples that you can implement into your life. We've talked a lot about tips and tricks for overcoming some of these theories and overcoming some of these behaviors that we might not like so much. And then choose one behavior to work on this week. Choose just one behavior that you can work on this week. And it can be small things that you work on, but I highly recommend choosing one of them from our presentation today. And a good resource to use too is our partners over at GreenPath Financial Wellness. They offer free accredited credit counseling, budget counseling, and COVID-19 counseling. They do all of this through the phone. They have great hours until 10 p.m. So you can reach out to them and call them and ask them for help as you continue on in really overcoming these behaviors and hopefully improving them just a little bit. And like Migdalia said, we do have a survey, and we'd love for you to fill out this survey for us. This will tell us a little bit more about how we did and how we can continue to make these presentations a success in the future. And of course, letting you know that all of this was just general overview of it all. And so you may want to consider what's best for you. You make all of those decisions. And so you are totally in control of your finances. That is up to you. And of course, all of our information is here. At the credit union, we are here as a service to you all, our community, my coworkers in the union. And so please just let us know how we can help in the future. We'd be happy to help in whatever way we can. We do have a couple of minutes for any last questions that anyone would like to have. But Magdalia, if there's anything you'd like to add, I'll pass it back to you.
Thanks, Sarah, and thank you everyone for joining. So I would just say, if folks, we did put it in the chat, and I know some of these came in. What are some of your next steps after today's session? I see some folks setting up a money date, finally looking into refinancing. Someone said, going to pull my credit report. So if folks could just drop in the chat, what are some of your next steps after today's sessions? That might help others that may still be questioning what they might do, get some additional ideas. But while we're waiting for that, I also dropped in the chat the GreenPath link and also the link to the survey. So just a reminder for folks to complete that before they log off. A reminder about planning fallacy. We may think we might get to it later, but might be just better to do it now. Someone dropped in the chat, looking into opening a money market savings account. Yep, that's a really good one. Going to weigh my options as to which loan to pay off with my tax return. I love that. If I get just $200 in my savings account every month for the rest of the year, I can reach my savings goals. Congrats, I love that. Did some Go Gradient there. And then another question that came in about finding certified financial advisor. I'll drop a link in the chat where you can go to find someone that's a certified financial planner. But you also all have access to GreenPath, and that they're not financial advisors. They can do credit and budgeting, but that's a really good start. And also through our EAP at Harvard, they do have a CFP on staff. So I actually would recommend contacting GreenPath and our EAP at Harvard, which is KGB. No, yes, KGB, to
KGA.
get KGA. Thank you. I was like,
You're
I think
welcome.
I'm wrong. Thank you. Contact KGA. They do have a CFP, and that's a really good starting point before paying for the service. I don't see any other questions or comments. Danielle and Laura, do you have anything you would like to add?
Just to add that we really appreciate your help and your insights, and that I need a whole lot of this to try to get my own budget in order. So thank you very much.
And I would just add, it's important that we all keep perspective and know that we're doing the best we can. This is something that is going to take time and practice, and that's okay.
100% agree, Laura and Danielle. This is definitely something that we're constantly working on and constantly changing. That is something that tells us that we're doing the right thing, is that we're constantly changing and moving on to new goals and possibly, failing at them, but knowing that that's part of our success. And we want to thank you all for joining us today. It's been wonderful to get to talk with all of you and learn a little bit more about you. If there are any questions you have after the presentation, we will be sending an email, so you'll have our contact information, and we'll be happy to answer those. But we hope you have a wonderful rest of your day and enjoy the sunshine here in the Boston area. Thank you, everybody.